In today's video, we're going to be talking about my investment portfolio. Hey guys, Michael Silva here. If it's your first time watching my videos, thanks for joining. Thanks for being here. I appreciate you. I have over now, I think, 60 subscribers, so, you know, I'm getting pretty
dang famous.
Woo! In today's video, we're going to be discussing my investment portfolio's performance for the week. So let's hop into it. I break this down into three sections. Those three sections are my retirement accounts, my opportunity fund, and then any outstanding debt. So starting with number one, my retirement accounts. My retirement accounts took the biggest hit for the week. Overall, my retirement portfolio, which includes the equity of my house and the emergency fund, it's at $147,559. That is down from $154,480. So let me think here. So that itself is down $7,000, which my entire portfolio is down $8,000. So my retirement accounts is the thing that took the biggest hit. Next on the list is the opportunity fund. My opportunity fund holds my gold and silver and my cash. Now what's so cool about the opportunity fund is, even though that there was a stock market pullback or correction, I still have the same amount of gold, 4 ounces, I didn't lose any, and 500 ounces of silver. And I also have the same amount of cash, $6,500. So the price of it went down, right, of gold and silver. Gold and silver sold off a little bit, which is also to be expected in sometimes times like these. About $1,000, so $23,500 down to $22,500-ish. So overall, my portfolio took an $8,000 hit, which is about 5%. This is not a bad thing, to be quite honest. When I look at the stock market right now, it's down 11%. So this is why diversification is so important. If I didn't buy the gold and silver, and I didn't have the cash, and I started pouring that into my IRA and pouring all that money into my retirement accounts, I would be seeing a lot larger decline in my portfolio. See, the problem that I had when I was younger was I wanted to oversave into that specific fund, but the thing is, if I don't have cash outside of the US stock market, when opportunities present themselves to buy things, for example, on sale or to average cost down, I can't do it because I have no cash. I remember when I was 18 years old and I had a decent job, I wanted to buy a house, but most of the houses after the 2009 financial crisis, you need to pay for with cash or, you know, have years of income. And I saw properties for $25,000 that you had to buy for in cash, 2-bedroom, 2-bath, like apartments, which is insane, for $25,000 cash. Now, I mean, the rent alone on those places would be $2,500 or $2,000 a month. It's absolutely insane. So if you don't have an opportunity fund, you can't move into those type of investments. And that's why I call it an opportunity fund, for when the opportunity takes place. And I mean, my personal opinion on the stock market, I don't think that the opportunity is quite there yet. I think there's a couple things that can still really hold the market from falling even further. And that's if we don't find a vaccine for the virus that's going around. And two, if companies start reporting bad earnings, especially when it's already like this, we can even see more farther downwards potential. I mean, there's a long list of things. I can talk about low interest rates. I can talk about the amount of debt. And I can talk about stock buybacks by the massive corporations that prop up the market. But I'm not going to get into that on this video. This is really just a weekly recap series. So overall, like I said, I'm down about $8,000 for the week. My debt, let's go into that. My debt is the absolute same. So I have the same amount of mortgage debt, the same amount of credit card debt. I plan on paying more of it off next week when I get paid. I am, however, thinking about potentially taking the cash out of my opportunity fund and just moving that to my credit card debt. I don't like having credit card debt. And this pullback in the market really made me realize, I'm like, dude, I just do not want any debt to my name. So I think I might be doing that. I'm gonna sit on it for the week, and then I'll let you know next week if if that does take place. So that's it. A couple little highlights. My retirement accounts themselves were down $6,900. That was basically the entire drop of my entire portfolio to my retirement accounts. But on a good note, it's a retirement account. I'm only 32 years old. I have a long time till I retire, so I'm gonna just be, like usual, working and putting my 6% into the retirement accounts and then loading my $6,000 into my IRA every year. So that's gonna remain the same. So yeah, if the market goes down, cool, I'm just gonna keep continuing to add. That's not a big deal to me. My credit card debt, like I said, stayed the same. My emergency fund, it remained the same. My opportunity fund down $1,100. However, that's just because of the value of gold and silver dropped. It's basically the US dollar dropped or went up, I guess, and then that brought the price of the gold and silver down a little bit. Still have the same amount of gold in ounces and in weight, and same with silver. And then the last highlight was that I'm pretty excited about was the markets were down 11%, and my portfolio was only down 4.5, so 4.8. That's all I have for you today on the weekly recap. Stay strong out there. If you saw your portfolio sell off, man, it sucks. Like, I'm watching all these YouTube videos and they're like, yay, excited to start buying into the market. But to be quite honest, most of the people saying that are young and they're just taking advice from what Warren Buffett kind of blanket said on CNBC interview. It's what Sue Zorman says. It's what other talking heads say, just like be happy about it. But there's so much uncertainty out there right now. I just don't see what they're so happy about. Even if they were to like buy right now and it were to bounce way up and recover, it doesn't change the fact that the stock market's not still like way overvalued, and we haven't been in recession for over 10 years. So I think personally, if you're in it for the long run for retirement, yeah, just keep average costing a little bit at a time, but don't go freaking crazy and dump all your cash into the stock market right now, because if it still has the potential to drop significantly more. So yeah, I'm just getting on a big old tangent right now. That's all I have for you today. If you guys have any questions, comments, concerns, emotional outbreaks, leave them down below in the comment section. It's greatly appreciated. See you soon.